money from here. So this right here is a live trade analysis. Though I'm not trading on my live account because I don't think I'll be trading today. Um, so I did an analysis, and let me do this back and put it back on. Yeah, so I did analysis to buy the euro dollar, and I'll be doing a breakdown in a few. So this was the setup right here. A London session. Normally I trade New York, but I saw something on the London session and I would like to share with you guys. So it was a buy setup, and I'm going to explain why I did it this way, like this. Take an entry, put a stop loss below this low right here. We still have the Asian low right here. And if you guys could remember my post on Facebook about a trade I was focusing on EURUSD, it traded off of a fair value. Actually it's right here. Yeah, so we have it right here, this particular one right here. This one played out February 14th, yeah, 2 days ago, and it played perfectly. So let's quickly run down to the chart and we look at it right now. I was just targeting this high right here, and the previous one taken on the 14th was right here. All right, and I think this was on the New York session or on the London. So take this off. No, I need the Asian session. All right, so I'll take off my logo and put my Asian and also the London New York session. Now it was on the New York session. I was focusing right here if price could trade down to this place and give me a buy setup, but what it actually did was it used a fair value gap right here, which is very perfect. Is actually good. Use a fair value gap. I would have entered the fair value gap and take the trade for the whole of New York, because if you also look at the 15 minutes time frame, you also see it right here. It's actually a fair value gap, but I refined it down to this point, and yeah, it used a fair value gap and it traded higher for 2 days, and then we are currently here. Now also we have another block right here. Now the reason I was taking this high is that price haven't respected this other block right here. So by giving a confirmation entry, it hasn't done that yet. So I will explain this later on, this trade, and then this particular area where we are right now. So alright, let me explain this one quickly. So if you look at the daily time frame right here, you can also focus also on the monthly time frame. This right here, you can actually pay attention, then you see that let me take all the joints off. You'll see that it did a hunt on previous 2 months low, and in that previous 2 months low we also have a fair value gap right here. All right, we also have a fair value gap right here, and I think that is at the equilibrium of our range highs and low right here, close to that, the range that we're dealing with right here. So remember, we are not having a structure here right now. We are just having a range market, and we are already seeing what happened right here, a hunt right here at support, then it trade higher, and we trade higher to this point, give it a swing high, it trade backwards to this fair value gap right here, hunting previous 2 months low, and going down to the weekly time frame, we still have this order block right here that price just traded back into again. So if you refine also to the day time frame, it reversed backwards to the daily order block that we had last year, that I was looking at also last year, but it went for that of the weekly and traded higher than last year, and it reversed backwards. I think it went deeper to it to mitigate that of the day time frame. and that was the reason why that trade on the 14th of February occurred. So now using my D range and also using a simple setup, you all guys know all about that. If you want a day trade, you're focusing on price trading below previous day low or trading above previous day high, giving it a hunt. That's how the algorithm does. And yeah, taking liquidity. So this right here was previous day low, and the day of the 14th of February opened, and we hunted that previous day low. And when you hunted that previous day low, we can specifically be focusing on our sessions. Whenever we're doing day trading or we're dealing with the daily candles, we are focused also on the sessions that we are. So immediately we did a hunt right there. So let's start marking the swing highs and lows. We have this high right here, and we have this low. These are the range highs and lows, the swing highs and lows that were printed on the chart. We have this new high right here, and this right here is also a range. Okay, but then I'm marking the external highs and lows, the highs and lows that are outside. You get the point. So those are external liquidity. This major high, this major low, this major high, and this hunt occurred. The purge right here, the price starts to accumulate after taking that previous day low. And then the next thing we see is that we can now use our sessions. We're having the Asian session, and then we are also applying that of the London and New York session. Now we grab liquidity from the area of Asian range high, trade lower to hunt the previous day low. It starts to range on the London session, and that is when the London opened. And most traders thinking that yeah, this is a supply zone and you would like to sell from there, but this is outside of the London session, right? It is not on the London open. So London open and it starts to accumulate right here. This is an accumulation phase occurring. Price tap into the supply zone. It traded lower and failed. Remember, it failed to break a structure. It failed to break this low right here. All right. So it now got violated. All right. So that violation occurred right here, giving us a structural break, change of character, breaking out from a high that came out from a supply. Change of character, and also if you have the stop loss, it hunted the stop loss. And now the question is, what is responsible for this violation right here? And that is the fair value gap right here, though I refined my own down to the sell candle that occurred right here. So it chose the fair value gap, and then it traded on the New York session, New York open, and then it traded higher, New York close. Not clean, but yeah, for day trading you can just leave the market on the New York close. So the next day opened, this was news session, news trading, so I don't participate in CPI or all those shit, other stuff. So it continued the structure to be drawn to previous day high right here, right? So this is a previous day high, this previous day low, and the next thing you could do is let me take this off. Next thing you can now do is to measure that range high and the range low that you're dealing with, and wait to see how price trades into the 50%. All right, price should not break out of the 50%. Like the 50% should give a little of resistance for it to trade lower inside this imbalance. And also premium price, if price trades into a premium pricing which has an order block, it should sell off from there, right? So now it possibly breaks out of the equilibrium, and now it is above the equilibrium price inside the sell side inefficiency, which is a liquidity void. All right, this is not a fair value gap but an imbalance, sell side imbalance. And yeah, it traded into the premium pricing but haven't given us a structural confirmation right here. So now I'm dealing in the current day at which we are, and you can also still go to your daily time frame and you just mark out the previous day highs and low. And we already know that price now tapped into this demand zone, and we are waiting for confirmation of this supply to be violated. And I think that is what the algorithm is trying to do, to break out of this supply zone. And once it does break out of this supply zone, giving us a break of structure or the channel character, and then trade higher to break this high, then maybe EURUSD will be willing to go bullish and yeah, start hunting this protected by stops on those highs. So yeah, let's move this to previous day highs and low. And yeah, we are close to the previous day high. And if you go down to the 1 hour time frame, this is it right here, a previous day high and low. Alright, so this is the other block that we have right here, other block that came out from also another block doing NFP. Is this NFP or CPR? I think it's NFP. This is NFP. So price tapped into the other block, but traded lower, give us a low. So now let's mark the structures. We have a high, and then we have a low. Price traded higher, giving us this high, traded lower, giving us this low, and that low did not break structure. So we are not looking for sales yet, because we haven't seen a confirmation entry right there. These are the structures that was printed, and yeah, we're not paying attention to that, and we will now go to use our session trading. Yeah, so the extra session is on, so we put on the London session, the London New York session, and right here we still have Asian range low right here, and we have an Asian range high right here, right? So going down to the 5 minutes, I'm now paying attention to see a structure that was formed, and ever since we have the what was it called, range, Asian range right here, we have this high, we have this low. Now this one are internal structure, alright, that is inside, formed inside the external range highs and lows that we are dealing with. So we can also use Fibonacci, do these highs and lows. Price retrace backwards to 0.618, and it traded lower. This is an OTE, traded lower, but it didn't break structure, right? It didn't break structure, and it started moving backwards. So we are now using again, measuring the Fibonacci right here. Price had 82 rejection on the 50%, and then violated, and now we are arranging another 50% equilibrium, and that occurred on the London Open, right? So London Open occurred, and we are now having a swing, right? Higher high, higher low on the 5 minutes time frame. So if I am expecting for the price to trade backwards, the only thing I can see is right here, right? But then there is no like imbalance right here, inefficiency that shows that it wants to like imbalance. Like if you either go look at and say, yeah, I'm certain this is it, alright. So because the gaps are filled up, the only place where we had imbalance was here, and here we have imbalance. So I can't find my other block, like a supply zone, sorry, a demand zone. Why can't this copy for me? Alright, so I can't find the demand zone, and I'll be like, it might want to use this to trade higher, or we are expecting to do an OTE till the area mark, the discounted price that I marked close to the 0.7 to 8 Fibonacci level right here, and yeah, this is the 50% of it right here. So if I have to look for my entry, my buy setup, I want to see it with buy from here. That is my discount price, and just target that high, and I'll be done for day trading or scalping, or is it intraday? So, but my favorite is actually the New York session, because I would prefer to let London do whatever it wants to do. It could possibly hunt, then trade lower. So just want to wait for London to be done. After London is done, giving me a swing high and low, then I'll just enter on the New York session and then know my directional bias for that day. So the previous day is here. Alright, the blue line is my previous day. So this is the previous day. Yeah, this is the previous day. We are close to previous day, expecting price to go on that previous day, and you can actually see it rising from the February gap. But I'm not convinced about it buying from there. I prefer it's coming down to discount. Yeah, so another thing is inefficiency on ACN session. Right here, those that trade, we know that price always retraces backwards to balance inefficiency, right? So let me use this. So we trade into the equilibrium of the inefficiency, so down, did not break structure, we traded backwards. So, and that of the 30 minutes, this is where it is. This is where it is, right? So we're now having a reaction on the Asian session inefficiency, and we are now having liquidity on these highs. We have buy stops, sell stops. Alright, so inside they didn't tap the refined one on the 30 minutes, but it traded into that of the 1 hour time frame. But supply and demand traders will be focusing on this point right here because of the week. Alright, this week hunted previous candle, so this is where it should be focused on. No confirmation for search. So that is it right here. You can see it right there on the 30 minutes. Almost tapped it. So it's kind of like did an inducements right here. It has induced smart money traders right here because it did not tap that of the 30 minutes refinement. So I'll take a pause and we continue later on. Okay, so we're back after some minutes, and we see that price actually went to that place. My entry did a sniper, and we are seeing how it's going bullish. So let me take this off to make my chart look clean. Alright, so yeah, 0.7879 Fibonacci level. Okay, so still on the land down session, and we're expecting it to go to this high, and that's a good trade to take profit from, and then you are done. It's actually doing something I love, possibly going higher. So we go again, Fibonacci, tapped into the 50% imbalance, trade lower but did not break structure, trade above the 50% Fibonacci level, came back to the OTE, the what is responsible for the impulsive move that traded higher and break a high after I fell low. Then retracement back to it, and we're going higher to the high. Then long term, this high to this low, trade into OT, trade downwards, did not break structure, came back to 50%, did not break structure, and we've seen it going higher. to buy stocks and disbuy stocks. So I think I just have to go a break, take a break again. So I'll have a little bit of a rest, and then I'll come back when it trades into this high. And I'm expecting to see if euro will possibly trade higher. Okay, because I can see that there's no liquidity here for this to take. It was supposed to reject off of this imbalance, the favor gap right there, sell side imbalance, but it did not. Alright, so there's the range highs and low, trade above the 50%. Let's quickly run out to the forward time frame and we'll mark that range highs and lows. So this imbalance is what it was supposed to fill up and then go higher, but and go lower, but it did not do that. So trade above the 50%, and now we're going higher. Now I might be expecting it to go higher on this high, and to possibly come back to this favorite gap left behind, and then we continue going higher. Probably that would be on next week. Yeah, that could possibly be next week, and yeah, I'll be targeting this high right there. Eventually, it has to retrace backwards to this and turn it into an inversion favorite gap, kind of like, you know, the imbalance is responsible to violate this imbalance. And yeah, we have buy stop right here. I'm down trade week, so don't think this will be respected, and that high will be target for Friday. Right, so it's Tuesday, Sunday. Alright, so we just take profit on this high. Just go about still expecting to go for this high and this high. So we're having Wednesday to be the low of the week. Tuesday wanted to form a high of the week, but you know, we have impact news, so yeah, see, just target this high, and then yeah, we see from next week we're going to this high and inefficiency right here. Okay, so yeah, let's go on a break. Okay, so we're back again, and you can see the delivery right here. We're close to hitting this. Okay, so I'm feeling sleepy right now, and I think I'll have to end the video now and go to sleep. So yeah, be safe and take care. From here, so there was this video I was supposed to upload last week, and I'll upload it together with this one, so I'll merge the both. And I explained something on EURUSD, but I didn't get to post it. That was done last week, and let me show you guys. This is right here, and it was the 13th. Is it 13th? Alright, it was done on the 16th of February right here. So like if you check on the properties, you can actually see right here, done on the 13th right here. So done on the 16th right here. So they posted, but then to go through it, you see where I made mention of where price we go to this week, and on the video I said next week, which is this week, and I made mention of the February gap. I was day trading right here, but then price didn't go to the target, in which that's what you see on the video. This video right here, targeting this high. Price gets close and then dropped rapidly, and it traded back to this February gap right here, and we start going bullish from that I did. So let's quickly go down chart, and yeah, this is GBPUSD. I just posted GBPUSD on my Facebook page just right now. I was expecting to see a bullish structure. Wanted to come down below right here and then go bullish, but it did not. So I was just watching it, and I was expecting that to be on a New York session also, because New York is smart trading days. So on GBPUSD, I was focused on the structural swing highs and lows, the range highs and lows. And then what do we have here? We have this high, we have this low, we have this high, we have this low. So like saying we're having lower high, lower low, lower high, lower low. And paying attention, we could see that this low didn't go below this low. And another thing is, this is a daily range where the daily is high and this low. And when you use the Fibonacci to draw the highs and the lows,
if price wants to go lower, we have used the 50% to trade lower, in which that is what it did, but it spiked up into 61.8 Fibonacci level and trade lower, but did not break structure, and it now shifted. Now my directional bias is that if I want to go, I was expecting Monday to be the low of the week. So what I meant was for price to open on Sunday, Monday should trade the lower structural shift, and yeah, we're going bullish. And that is what we actually see right here. And when you go down to the 45 minutes, you actually see right here we have Monday creating the low, and we don't see a structural shift on the Tuesday, and we're not trading higher. And I'm targeting these buy stops because we didn't have a structural break. And also looking from the monthly time frame, you can actually see what we did right here was a hunt on previous month. Now pay attention to this also, this high, this low. We didn't have a structure like a lower lows and lower high of a thing. And on the monthly time frame, this right here is a daily range, and what we did was it hunted previous month low. Now January, there's something I explained, I gave to the mentorship concerning everything about the algorithm, quarterly earning for the year, and how the algorithm operates using some certain months for T3 months, and using the value of 4 on the chart when they want to do the analysis. And this is one of it. You can actually see we are now focusing on the 3 months of the year, the first 3 months, and that is January, February, March, and we are anticipating to see which one we have to give us the low of the year. And also we're also looking for the next 3 months, so we're focusing on the first 2-3 months to see how which one will give us the low of the year. And you see February did the hunt right there of the previous month, and that was where you can actually have that bias of what the algorithm did by printing the structure for us. And me looking for my entry right here on a demand zone. This is another block which also has a demand zone, and when you go to the 1 hour time frame, you see the stuff right there. Now about EURUSD, my POI right here, this is where I was trading last week, and if you pay attention, this is where I was buying that last week. This point, nope, yeah, this point, and was it expecting to buy higher to this high, but it didn't buy. And based on what I explained to you guys on the video, I say that I'll be expecting it this week to trade lower to a fair value gap. Yeah, it was at this point. This is it, right? At this point, let's go back to the video so that we can take a look at that for our time frame. So this sell candle, all right, so this is it, the 4 hour time frame, this sell candle, and this was where I was trying to trade, not actually here, but at this point. So we can actually see that we actually trade into the fair value gap that I talked about last week, that we are to trade into and to go bullish. But my expectation was I was wanting to see go higher, then coming back to the fair value gap. But it happens to be there was a news impact, and yeah, the news drove it on the New York session straight to the fair value gap that I told you guys that was supposed to happen this week, but it happens to be it happened that same week, and then we are now seeing the bullish scenario going high. Now also using the daily range, we have this range, high range, low range, high range, low, and using Fibonacci, we have this almost trade to 50%, but then we are now having a new swing highs and lows, and we are now doing the daily range. We trade above 50%, and now we are using that 50%. You're looking out to see a fair value gap or other block that was responsible to trade above that fair value gap, and that was what the algorithm did immediately, and use the fair value gap to trade higher, and we'll be targeting the buy stops. Now on daily time frame is also tapped into a daily order block, and my directional bias from last year that I want to see go this high, I think that is what we're going to be seeing. And looking at the monthly time frame again, so let me delete all of these. Looking at the monthly time frame again, you can actually see that what EURUSD did was a hunt on previous 2 months. Right here we have a hunt on previous 2 months, which led this to trade into a fair value gap, which had a daily order block right there. So yeah, and let me take a look at the XY because I would like to check something for smart money trap or technique like that. Yeah, so this also trade into a fair value gap. I marked out on EURUSD. This I did not share with you guys on YouTube or Facebook, because I've been working on the project ever since. Now, what I did right here on the XY was we have an accumulation right here, right? So after the accumulation, we now have a distribution to the upside to induce retail traders who are trying to buy this market. You actually see right here, this is ranging market, and we distribute it upside, hunting, trying to sell to buyers. And this next draw will be here. That was why I marked the fair value gap, because the fair value gap is above liquidity. It's the same thing I did explain when we did the hunts right here. It's just the same principles, right? Ranging, manipulation to the upside, and then we'll start trading lower. That was what we actually did right here on DXY. I'm going to be publishing a book very soon, probably next week, that has the full details on how the composite manipulate the algorithm of control that I posted on my Facebook page. I know most of you guys might not understand it that much, but the book have much details in it, and you know, the secrets. If someone was to put in information, he doesn't put it online. They are all written in a book. So I will put in every details concerning how the composite man operates and how you can use that to predict future prices, to understand how the economy works, and yeah, to then all the information will be put inside that book. I will not be releasing anything on videos unless if I decide to, and I already upload a video to my mentorship. They are the only ones they have known for now, and yeah. So see, I also talked about Shiba. I bought Shiba. Like I say, it's not a financial advice, please. I've been a fan of Shiba Inu, and I bought it 2021. Also, I also profited from this rapid bull run that occurred right here in 2021. I was a student back then, and now Shiba Inu has traded lower, and right here it been ranging right here, building up, and what I can see right here is it building up an accumulation, and we can actually see we did a hunt right here, and using the Fibonacci we tapped into 61.8 Fibonacci level, which was lower, and it is going backwards, not respecting the price that would be holding it right there, and it's been buying from another block. This is actually the place where I bought it. And using the algorithm range, we have the 3 months. We already seen that we have already hunted previous 3 months low, and we'll be targeting 6 months, but my target was actually a 12 months, which is a previous year. This is something that I just recently uploaded in mentorship, and my long-term buyers have to, because due to the fact that it is very cheap, I can accumulate millions. I can even buy a million pieces with $20, which is really something that everyone can afford to lose. So you just buy, and I'm just willing to lose that, and yeah, could possibly target this high, and we see a future pricing of it. Maybe we like to see go to 0.01 USD, and yeah, it's just a long-term bias, nothing serious. It's something that I was willing to risk. And there is also another asset that has not been affected by the dip that happened last year in BTC. It was only dipped on 2022, and this is actually how the composite man works. If they want to buy an asset, they could possibly induce a sell, and yeah, so that retail traders we can evolve and they will start to accumulate the price. And that is what we actually have here. You can see the accumulation. We finally have the hunt taking out retail stops, and yeah, we started trading higher, and using the Fibonacci, you are marking out the highs and lows. Price tapped into the 50%, break out of it, and that was what it starts to print higher high, higher lows, higher high, higher lows. And yeah, but this one I have no interest in. I was really interested in Shiba. So yeah, that is it, guys. So see you guys later on next week. I don't know, whenever I know I'm not working on my project. Yeah, so we keep on predicting the price for the future, and yeah, bye.